Brent Thill, Jefferies tech research analyst, joins us now. Brent, that seems to be the question of the morning as everyone is assessing the prospects for the second half. What's your take?
I think tech can continue its rally. We've had a massive underperformance in software, so we do believe that software can pick up the pace. Semis and infrastructure have been leading the charge. So we look for a more weighted software rally in the back half of this year. It's massively underperformed. Semis up close to 50, software up 7. So we do believe year to date, we believe that software can have a better rally as we go into the seasonally stronger second half, as well as we look at 25 numbers. So it's been a challenging front half for our core coverage, but we think that that will change in the back half. We do think it's super early in AI, and so we think we're in really early innings. We're in what we call an AI picks and shovels. We're buying the core infrastructure to get these data centers up. The software really is not there yet. 95% of AI deployments are what we call POCs, or proof of concepts. Those have to flip to live installations and get the full value. And as that happens, we think companies like Microsoft are in great shape with their Copilot strategy in the back half. Amazon will also benefit in a big way in the back half. Others like Snowflake, Elastic, who are riding this AI wave as well, will benefit as we go into what again is largely fueled by infrastructure, and then as we call it, the applications or the software, which is the art that's going to get hung inside the house. We're building the frames of the house right now. We don't have any of the artwork. That will happen late 24 into 2025.
The market leader for AI chips, Nvidia, was down more than 10% last week as investors started taking profits after a huge run that took the stock to around $140 per share. Now, analysts are expecting this to continue and saying that investors should shift from companies that provide AI hardware to companies that provide AI software. When we say AI software, you might think of companies like Microsoft or Alphabet, but one major AI software player that all investors should be paying attention to is Palantir Technologies, whom Wedbush Securities Dan Ives called the purest AI play out there. Ives isn't the only one betting big on Palantir, as ARK Invest's CEO, Cathie recently doubled down on Palantir stock after selling Tesla shares, which was surprising to many. In today's video, we're going to talk about the possible motive behind Wood's trades, as well as where Palantir will be in 5 years, so you can decide for yourself if this AI software stock is worth buying. But before we do that, if you want to keep up with Palantir's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
Markets, a rotation out of the AI trade today. Micron leading the semis lower after its earnings report last night, taking the other chip stocks with it. Nvidia down over 2%. Qualcomm and Broadcom following suit as investors left the red-hot sector. Where do they go? Well, maybe, surprisingly, they didn't flee tech entirely. It looks like software names like Palo Alto, Palantir, Salesforce, and more, all posting strong gains. What does this rotation within this tech sector tell you? I mean, presumably it was always all the spend is going there to AI, and so therefore it's going to be pulled from software and SaaS, and so we just have a reversion here.
Well, I'll just say this. In the last couple of weeks since WWDC, Apple has been a huge beneficiary. The stock went from 192 to about 215, and when you think about that, I thought that was pretty bearish. Whatever the excitement was about Apple is that they weren't spending billions and billions of dollars on high-end GPUs to build their own models, and then they were going to get into. They've been actually licensing, or they're going to be licensing a lot of other folks. And when you think about that, okay, what are the use cases right now? And they're not very clear, I mean, to me, the monetization efforts. And there was an article in The Information today I thought was really interesting. It said, in a surprise, OpenAI is selling more of its AI models than Microsoft is. So when Microsoft reports in a month from now, if they're not given the goods, if they're not saying that all of this investment, $13 billion in OpenAI, and like the budget shift that they've had, right, towards selling these sorts of products and what it means for their enterprise customers, I think the whole trade, I think a lot of error comes out of it, to be very frank. And it won't be too different than what we saw from late July to October of last year. The S&P sold off about 11%, the NASDAQ a bit more. Stocks like Microsoft were down high teens, from those highs. So again, I think it's obviously a bit more severe now because there's been so much much appreciation. Microsoft's up 47% from its October lows. You just do the math on a $3 trillion market cap company. It's pulled forward a lot of excitement about what they may do, how they may monetize these investments.
Cathie Wood recently bought 37,053 shares of Palantir, worth $957,078. And this came after ARK Invest reduced its share in Tesla across two of its ETFs, the ARK Innovation ETF and the ARK Next Generation Internet ETF. Notably, just a day earlier, Wood picked up Palantir shares worth $5.16 million. The Tesla transaction was valued at $14.5 million and came as a surprise to many investors, as Wood is one of Tesla's biggest bulls on Wall Street. In fact, she even predicts that the stock will go to $2,600 in the next 5 years. But this trade isn't too shocking when you learn that Tesla shares jumped by more than 10% after the company beat Q2 delivery estimates, so Wood probably wanted to take some profits. Remember, Tesla is still ARK's largest holding, as Wood's ETFs combined own shares worth more than $700 million. This, however, doesn't take away from the fact that she's extremely bullish on Palantir, and she even said that she sees it competing with the tech giant Microsoft when it comes to AI software. It also might be a sign that Wood is recognizing the shift from AI hardware to AI software, as she recently sold Nvidia shares worth $4.3 million. But should investors follow suit and buy Palantir shares? Let's take a look at the company and the recent news surrounding it to find out. Hello, everyone, and welcome back to Investocracy.
I mean, looking on the surface, not a lot to complain about. You know, 5,500 on the S&P. The VIX is now below 12 as it's trading right now. The macro seems quiet enough for stocks to kind of rotate and do their thing. Is there anything you would look at and say, we're missing something here? The market maybe is either too complacent about something or it's got it right?
Well, I mean, we're not going to appreciate every quarter the way we did Q4 last year, Q1 this year. So, you know, we'll take, you know, whatever, 4% change a quarter, every quarter forever would be fine. I think the three kind of bull sort of legs of the stool are in case, right? Margins are going up for the average company. Financial conditions, at least if you look at Chicago Fed or, you know, the Bloomberg financial conditions, other look pretty easy. And this dream of AI earnings growth, what it could do years 3 through 10 or whatever, still seems pretty dreamy, right? So I think that's intact. We'll see. I'm not expecting to get any major negative pre-releases on earnings this week. It's a little bit of a weird week with the holiday in the middle of the week. And normally, you know, when you get worried, you're worried about a reset to second half of the year earnings revisions. I don't think we're going to get that. So I think so far, you know, there's a sort of a positive skew to the outcomes. But the way you teed up that question of could anything worry me, of course.
Well, of course, yeah. You could always go looking for something, without a doubt.
It's not just Cathie Wood that's betting big on Palantir, as Bank of America analysts recently added Palantir stock to their top 10 best U.S. ideas list for the third quarter. They also reiterated their buy rating for the stock and $28 price target. Bank of America believes that Palantir is poised for significant upside driven by the accelerating adoption of AI. Additionally, in their most recent note, the analysts identified several factors that will propel Palantir's growth. For starters, they forecast large growth in defense sector AI integration, and this trend will directly benefit Palantir. Not only that, but the company's commercial business is expected to grow massively through boot camps and other channels, demonstrating the value of its AI solutions. And finally, the analysts said that potential inclusion in the S&P 500 index could lead to more institutional investors paying attention to Palantir, which could in turn boost the stock price. It's also important to note that Bank of America's technical analysis also supports their bullish outlook, as it points to a bullish correction that has positioned the stock for a move towards $30 per share. The options market is also considered an attractive opportunity by the analysts, who argue that options prices underestimate the potential volatility surrounding the upcoming Q2 earnings announcement, which creates an opportunity for investors to gain leveraged upside exposure through call spreads. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
But let's talk about why you continue to see and be the bullish Dan Ives that you have been for quite some time.
Look, and it speaks to our view going into the year, NASDAQ 20,000 is ultimately where I think we head. Tech stocks up another 15% because even though this has been led by Godfather of AI, Jensen, Nvidia, the multiplier for every dollar spent on Nvidia chip, $8 to $10 flowing through the rest of tech. Software, infrastructure, semis, and I think now consumer AI revolution with what's happening in Apple. In my opinion, it is 9 p.m. in the AI party that goes to 4 a.m. And I think this tech market, bull market's going to continue.
How long does it take to get to 4 a.m. though?
I think in our opinion, it's a 2-year tech bull market because I think the next phase, the second, third, fourth derivatives, it's about the use cases playing out. Of course, you see what's happening with Microsoft, the hyperscalers, Google, Amazon, but then next, it's going to be names like Palantir, MongoDB. I think what McDermott's doing at ServiceNow. You look at Oracle. If someone told you Dell was an AI name 6 months ago, they'd say there's no way. Look at it today. And I think it's a 1995 moment, not a 1999 moment. I think numbers go up significantly going into next year, and it speaks to our view where the bears will continue to yell in their caves about valuation with their spreadsheets, but I think this tech market continues to move higher.
There's no denying that Palantir stock has benefited greatly from the generative AI boom that was kicked off by the release of OpenAI's ChatGPT in 2022. In particular, the company's stock is up more than 60% over the past year, and with many analysts saying that Palantir stock is actually overvalued, has all the growth been priced in already? Or should investors go ahead and buy more Palantir shares? To answer these questions, let's take a look at what the next 5 years might have in store for this AI software company. For starters, the company can be considered one of the early AI companies, as it's one of the few companies that actually pioneered technologies like machine learning and big data analytics. Palantir's business model is a software-as-a-service one, where clients pay a recurring fee for access to its 2 main AI platforms, Gotham, which is targeted at commercial clients, and Foundry, which is designed for the company's business with the government. Palantir's government contracts are very important to the company and can be considered the key to the company's economic moat. This is because, unlike typical software companies, Palantir has a long track record of working on classified missions with the government, and most recently, the company has helped the Ukrainian army with targeting in its war against Russia. And the company's commercial business is also thriving, as Q1 commercial revenue jumped 27% year over year to $299 million, while government revenue grew 16% to $335 million. In the end, we could say that Palantir's future will depend on how well it can integrate large language models and other generative AI technologies into its existing data analytics solutions. And while Palantir is a market leader when it comes to this, investors shouldn't ignore the fact that the commercial side of this opportunity is really competitive. In fact, rivals like Snowflake and Microsoft's Fabric offer similar data analytics software, and these companies also have an in-house cloud computing focus, while Palantir's Foundry relies on third-party cloud service providers like Amazon's AWS, Google Cloud, and Microsoft Azure. But the good news is that Palantir's government business looks sustainable, and new technologies like drones are increasing demand for the type of services that Palantir provides. With all of this in mind, Palantir investors have a lot to look forward to over the next 5 years, as the company remains unbeaten when it comes to providing AI software to governments. The AI data analytics market is expected to reach a value of $223 billion by 2034, growing at an exceptional compound annual growth rate of 22.6%, while the global AI in the military market is expected to be worth over $24 billion by 2032, so we see no reason to bet against Palantir right now. But what do you think about Palantir stock? Is it a buy now? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Palantir is. If you would like to know what companies like Palantir have been up to these past few days, go ahead and click on the next video on your screen. See you there.